Now, to start us off, Senior Wealth Advisor Leslie McCormick of the Farwell Group, author of the book Bank on Yourself, Why Every Woman Should Plan Financially to Be Single Even If She's Not, joins us. Good morning, Leslie.
Good morning, Marilyn.
What do you have for us today?
Well, it's that time of year. The weather is getting nice, spring's arriving, and so is tax time. You've heard us say it before. For many Canadians, their tax bill is their largest expense over the course of their lifetime. It can exceed the combined costs of mortgage, education, travel, and cars. It's one of the biggest ways that people lose wealth. This is the time of year when we see just how much tax we had to pay on last year's income. Valuable information, but at the same time, we need to recognize it's backwards looking. By the time you prepare your tax return, the opportunities to be tax efficient are gone. What's done is done. We can't change yesterday, but we can certainly make a choice to consider integrating tax-efficient strategies as we look forward, particularly for those planning and living their retirements today. Because tax in retirement can be very different than it was during your working years. We know that today's retirement is unlike what retirements in the past have looked like. Today, retirement typically costs more because people are more active. We're living longer. In fact, for many people retiring today, we're looking at time horizons of 30 years or more. And if your financial resources are going to last your lifetime, and if it's important to you to be able to leave a meaningful financial legacy, tax efficiency in retirement is critically important. That's why a retirement plan isn't complete without a tax-efficient income plan. A tax-efficient income plan considers some of the following questions: what your sources of income are and how those sources of income are taxed, what tax bracket you'll likely be in the future, will you be subject to the old age security clawback, identifying opportunities to be more efficient. And what that plan can do is include things like where to take income from and when to start taking CPP and OAS, what type of investments are made in various different accounts, and for those nearing retirement planning, what accounts to prioritize saving in to be able to enjoy your future retirement income. Over the past couple of months, I've been working with Mary, who's retiring in the next couple of months. I think probably in about May is what she's planning for. And we've been planning her retirement for a while now. But our focus has changed to creating a tax-efficient income. To do that, we've been working with her cross-border accountant. Mary files taxes both in Canada and the U.S., and we've been testing different scenarios for timing of when she would take U.S. Social Security, CPP, Old Age Security, and when to convert her RRSP to a RIF. By simply looking forward, by putting different timing scenarios into her retirement plan, we were able to increase her after-tax income by a projected 5% for each and every year of her retirement. Having a tax-efficient income plan is just as important as a retirement plan. And while this tax season will tell you a lot about last year's income and taxes, a little future planning can save a lot of future tax expense, like it did for Mary. If you don't have a retirement income plan, use this tax season to work with both your wealth advisor and your accountant to look forward and make reasonable adjustments now so you can make 2021 and beyond better tax years than they were last year. Because more important than what you make is what you keep.
Well, looking back to learn a lesson and to plan for the future and to save 5% in this case for Mary, or actually to make 5% in income every year. So it's the who, the what, and the where. The what and where can be helped by having the right planner. And if you want a second opinion and you want a view on whether you can actually save tax money and do your retirement tax efficiently, all you have to do is take down the number for the Farwell Group. And I have it, 416-863-7501. That's 416-863-7501. And Leslie, I have signed copies of your book. I only have about 2 copies left. If anyone's interested in taking charge of their wealth and planning their future, the book is a great investment and it's a great gift to yourself and to others. Bank on Yourself, Why Every Woman Should Plan Financially to Be Single Even If She's Not. Leslie, you need to send me more books, please.
Will do, Marilyn.
Thank you. So take charge of your life and take charge of your money. And as much as taxes help make the country work, you don't have to overpay. You can have a tax-free, efficient income plan. Call Leslie or Darren and the Farwell Group. I'll repeat the number, 416-863-7501. Thanks again, Leslie.
Thank you, Marilyn.